Hey everyone, Dr. Barry Burns here with Top Dog Trading, and today I'm going to share with you a stock market trading strategy that is very simple, but very, very good. And you know, a lot of times the simple stuff's the best. I think we try to overcomplicate things. So today, let's stick with the basics, but give you something that actually works. So let's get into it. What we're looking for are major swing highs and major swing lows. Now, I have this automated. I created a indicator here, Top Dog Swings, and it's got a very specific mathematical formula to it, and it automatically draws these horizontal blue lines on my chart. So it's beautiful because it's automated. I don't even have to think about it. But the basic premise behind it, the logic behind it, is to find major swing highs and major swing lows, like that major swing low there, this major swing high here, that would really stand out visibly to anybody trading this particular time frame. This happens to be a 30-minute chart. But you do this on a daily chart, a weekly chart, a 2-minute chart, a 1,000-tick chart, whatever time frame you're trading. The concept is to mark the visible highs and lows that really would stand out to just anybody looking at a chart. So those are what I call horizontal support resistance levels, or swing highs and lows. And then those become support and resistance. So now, here's what happens in real life, okay? Let's talk about, it all sounds great to trade support resistance, but here's what happens in real life. So we got this swing low here. That low definitely stands out very dramatically. And then you're going to say, okay, well, I'm going to buy when the market comes down to that support level. And then guess what? They gap the market through it. This, by the way, very, very common. And it's the professionals who do this. And the reason is because they see that support level, and they basically just don't want to deal with it because they know when a lot of people see that support level, people will be buying off of it or taking profits into it, and that will reduce the energy, the selling energy coming into it. And if they want to create a lower price for this stock, they just don't want to deal with it, so they gap it through the next day. Isn't that nice? Yeah, they're nice guys. So it looks like it's an untradeable situation, and essentially that is. But there's still a trade opportunity. And that is the very basic principle a lot of you have heard of, which is support becomes resistance. So now it's overhead resistance. So we can still use it to trade. We still keep our line on there. And we wait for the market to come back into that, what was support and is now resistance. And now we can take a short trade off of that. And we're going to need some other things because we need to look at trend, momentum, and cycles. But that is one of the energies that we look for, support resistance. We look to short off resistance and buy off support. So that's how we trade that type of dynamic. When they gap it through a major support level, we'll look to buy off of that same level, or in this case, short off of that same level, but as resistance. Now, let me teach you one more technique that's also very, very powerful. So this technique is called the principle of three. So this is a little different, but equally as important. So here we go. The market has come up. We have, well, actually here with the high a little bit, but this is our real major swing high here. Now, will this resistance level be broken and the market go above it, or will it hold and the market move back down? That's the question. So one of the things we do, and again, there's a market psychology behind this. When I talk about market psychology, by the way, what I'm referring to is that the market's not all about mathematics. It's about how human beings and the computers that they've programmed behave in an auction place, a bid and ask auction place. So there's a mass psychology element to it, and yes, even with trading programs there is, because it's people who program them. They use a personal strategy for that they believe has a logic to it. So here we put in a major swing high. All right, we come back to test it here and here. And this is the principle of three. So the market comes up, initiates the swing high, comes back down, retests that price, and is saying now, essentially it's the next day, yesterday the market said, no, the stock's not worth more than, $1.98 and a few cents. What about today? And then when the market comes back down, they say, oh, I guess it didn't. And then they try one more time. There's the third time at this price level. And if the market, meaning the masses, the thousands, the millions of people who are all trading this and their little computers, their big computers, all say, no, No, we're not paying more than that. After the third time, the market gives up. Everybody there's a collective movement of people saying, all right, we get it. We've tried 3 days in a row. 1, 2, 3. This is a 30-minute chart, but these are 3 separate days as delineated by these vertical lines here. And they say, gosh, okay, I guess nobody's going to be buying at this higher level. And therefore what? People get a bearish sentiment. And so therefore the market goes down and people will short. And yes, that's what happens. I'm glad that happened. Okay, and it gapped down even here, didn't it? So we get another gap, and notice what happened. Comes right back to that level and provides a resistance level. And then we gap up above it. So again, these gaps, they like to gap above and below the support and resistance levels. So remember that. That's principle number 1 today. That's lesson number 1. Got 2 lessons today in our stock market trading video. And then the other is the principle of 3 for whether to determine if support resistance levels are going to hold or if they're going to be broken. So I hope you enjoyed the lesson today. And by the way, if you like this video, I'd invite you to please click the like button below and leave a comment telling me that you enjoyed it. And maybe even tell me what you'd like me to cover in future videos. I'd be happy to acknowledge that and do that for you. Also, I'm giving away one of my favorite trade strategies called the rubber band trade. It has an extremely high win-loss ratio, and I'll give that strategy to you absolutely free. You can learn it in about 20-25 minutes. It's very quick. I've made a video explaining this trade strategy, and you can get it absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, then click the little eye with the circle around it in the top right-hand corner of this video. And once you do that, I will personally email the video to you.